Hit go live. And gonna double check it. Gonna double check that everything's working. There we go. All right, everybody, welcome to the Daily Plan. I know for a lot of you watching this will be Saturday, and I said I don't post daily plans on Saturday. That's just because I'm doing this very late at night on the West Coast here, just before midnight here on the West Coast on the Friday. Now, the advantage of actually doing these streams sort of towards the end of the day is I get to get all the research that everybody's done, and I get to read it. All of their research for the week ahead, and reviewing everything that's happened here on Friday for NFP. So compared to other commentators, I actually have more information to convey when it comes down to exactly what I want to say. So enjoy the weekly outlook, effectively. I'll be going over some of this stuff in the trading group weekly analysis. That'll be mostly trade plans for, okay, exactly where are some likely probabilities to buy, like this here on the DXY. Like, oh man, yeah, some good trades this week. Some good trades. Okay. So let's get this a show on the road. So first off, there's some debt ceiling news, right? The Senate passed the debt ceiling. That's pretty much it. Now it's off to the president. And I think we don't have to worry about the debt ceiling until, 2025? And that's that, as far as debt ceiling goes. And a lot of commentary brought up, okay, now the debt ceiling is no longer a problem. And that's, the issue is pretty much settled now. So now let's get into NFP, right? Guys, what did I tell you in the last daily plan? I said when it came down to interpreting NFP, it was what? It was straightforward. If we got a consensus or below consensus print, that would mean the US dollar would be bearish. And if NFP printed above consensus, like it did in a major way, and I also mentioned that there were, I don't know if I actually mentioned it in the stream or not, but I certainly mentioned it in the Discord. In the morning when NFP was, just before NFP was coming out, Sarah House from Wells Fargo came on Bloomberg, and I was watching Bloomberg, streaming it in the voice chat. And Sarah House was like, we had to revise our NFP forecast and expectation higher. And one of those factors was the Citibank US, economic surprise index is actually quite elevated. And we need to take that into account with our forecast more seriously. And I'm like, oh, the Citi surprise index is actually high, so I actually went and checked it. I'm like, oh, yeah. Up. Up, say the least, up. And when you get, a print above consensus, that's going to make the dollar bullish. Because right now, the Fed's policy is if the labor market's running hot, so the NFP gave ammo to the hawks, but then unemployment came out, and it came out higher, and that gives ammo to the doves. And then I listened to Jamie Dimon, and I listened to a bunch of people give their commentary on expectations for the FOMC coming up. And I think I'm going to try and see if I can find it. I think it was Larry Summers, if I recall correctly. Yeah, Larry Summers. I posted this in the research channel under central banks in the Discord. He had a particularly great breakdown of the different scenarios for the FOMC. And by the way, the next FOMC meeting is in the middle of June. It's like, I think, June 14th, if I'm not mistaken. Yeah, so if you want a particularly good breakdown of the different scenarios for the FOMC rate decision in about 2 weeks from now, I recommend listening to what Larry Summers actually has to say. And the link to that's in the Central Bank's channel, in the Plan the Profit Discord, and the link to the Discord's just right there in the description. And just as a little confirmation, let's see here. FOMC, yep, June 14th, right there. Right there. Okay, so let's see here. What is it? NFPP consensus, especially positive US dollar move. I think that the positive US dollar move is, at least the momentum from this move, at least the momentum from it's going to continue into the beginning of next week. Because, again, the conflicting employment data is going to kind of muddy the signal. There's a lot of noise, like how unemployment rose alongside NFP. That signals a loosening labor market. Overall, taking all the information into account, I think net, the employment situation is loosening, which is why still most of the, most participants who are giving serious opinions on the FOMC are effectively saying, yeah, they could do 25 and give particularly dovish policy in the speech afterwards, or they could hold and pause and just give a, we're going to stay data dependent in like a slightly hawkish meeting minutes after that. So really the most important thing out of the next FOMC isn't actually, I think it's not going to actually be whether or not they do 25 or pause. It's actually going to be how the Fed wants us to interpret it when they give their speech. When Powell goes up there after the meeting minutes is announced, and not the meeting minutes, after the rate decision is announced. Once Powell actually gets up there and starts to speak and does Q&A, we'll have a better idea of what the Fed's intentions are with whatever their decision is, whether or not it was to do 25 or pause. And that is what the market's going to be far more interested in, and what will, I think, in the end actually determine the market's sentiment of future FOMC policy going into the second half of the year. I think that's a much smarter way to actually approach the FOMC going forward. And I heard maybe one other commentator give that sort of outlook, like, hey, wait and see until Powell actually gives his speech. Because 25 or pause, it's kind of a moot point, because it can be either or. The way the market actually interprets the pause or the hike is going to be based off those meeting minutes. So those are my 2 cents on it. Next, I think one thing I should show off real quick. The NFP? Yeah, the NFP. It moved 3 particular FX pairs a lot. It moved dollar yen, pound yen, and euro dollar. So real quick. Real quick. I just want to check out those assets. And you can see I got a whole lot more stuff here in my watch list. And I even got a new section just for crypto. I'll be going over some more crypto hopefully next week. So here we have dollar yen, which in the last 12 hours went up 116 pips, 114 pips, which was insane. And then I have these extra little clips of research. And you can pause the video and read these if you want, but I'm going to go over these little tidbits more in detail in the trading group. Let's see here. What else is there? I mean, I could go over a little bit of it here. I don't see why not. The next one is euro dollar. Look how it just went. Someone put the kibosh on that one. Oh man, yeah, and the yield spreads are totally flat, totally flat. Actually, let's now check out the last one, pound dollar. Pound dollar has a particularly poor outlook. I mean, you can, again, if you want to pause and read this, particularly poor outlook. And the yield spread got hit hard on that one. It was super positive and went sort of back to a neutral stance. Not fantastic. Not fantastic. But yeah, those are the outcome. Those are the three biggest movers from NFP, and all those moved on NFP. Eurozone inflation is it's the next big topic. Look, I know Eurozone inflation came out a few days ago, but that particular inflation print, it's been discussed so much in the outlooks. It's been discussed so much in, like, everybody's talking about it. All the Australian outlooks are talking about it. All of the New Zealand outlooks are talking about it. All the US outlooks are talking about it. Everyone's talking about Eurozone inflation. So let's head back to the euro dollar here so we can, get a glimpse of this thing. And, let's look at it on a 1 hour. You can see right around here is when our little NFP at 5:30 West Coast time, right? NFP came out right around here. You can see the damage that caused. So what's the deal with Eurozone inflation? Eurozone headline inflation is expected after this one to decline further. And the two outlooks that I got that specifically said that I bothered to write down was Danske Bank and Moody's. ECB and oh my god, here's the next thing. Some people are anticipating that the ECB will hike 25 basis points 3 more times. Some people are expecting twice. I think at least 50 more basis points worth of rate hikes over the next 2 meetings is definitely kind of baked into the cake now. But some people are anticipating, Lagarde is so damn hawkish. You could get another 25. It's like, okay, well, I'll believe it when I see it when we get there, right? Other than that, one thing. Oh, in the last daily plan, I mentioned this whole thing about the German transport tickets. I'm like, what's going on with this thing? Danske Bank actually wrote in their outlook about this too. I was talking about how Nordea pointed it out on the release day, but Danske Bank actually pointed it out in their weekly focus. So, yeah, Danske Bank, like Nordea, said that the German transport tickets are the likely key reason for the decline in Eurozone inflation. And so at this point, I'm like, okay, I genuinely don't understand enough about these freaking tickets to understand how they've moved all of Eurozone inflation in such a significant degree. So earlier today, I just said, all right, let me just do a little bit of research here. Again, my only frame of reference is how similar transport tickets have moved Japanese and inflation before. So I looked into it. Let's see here. I'm looking at my notes. Oh, all it is it's telling me, yeah, I got a link that went over it. Effectively, it's a 50 or a 49, rather, effectively 50 euro ticket. And it's a single ticket that you can take and buy in Germany that allows you to take any public transport as many times anywhere in the country of Germany for 49 euro a month. That means you can take, like, the trains, the long distance trains, you can take the short distance trains, you can take the buses, you can, like, the subways, you can take everything as frequently as you want for $49. Now, the reason why this is actually moving inflation lower is because it usually would cost you a bit more than $49 a month if you wanted to take all those transport trips. So the transport agencies, the people who actually run them, are like, hey, we're not making enough money. So the government's having to subsidize the parts of the transport agencies. But one of the reasons why the German government's doing this in the first place, while I think Scholz, right, Prime Minister, right, why him and his cabinet put this into place is explicitly because it would bring down inflation by having people spend less on transport costs, right? So that's why this whole German ticket transport thing actually is meaningfully moving inflation lower, because it's effectively the government operating at somewhat of a loss. Although I bet there are some people who are quite upset about it from the article that I read. So there's that. As far as also the Eurozone goes, we have GDP next Thursday, and that could be a catalyst for some price moves. So watch out, like way out here. We have, Thursday. All the way out here on Thursday, we have Eurozone GDP. Okay, now we're going to get into more stuff for next week. Aussie dollar. What do you think I'm going to talk about when it comes down to the Aussie dollar? Let's see. Ooh. That was a nice little short there. For the day on a day trade, that was a nice little short there. You gotta be kidding me. Like 95% of the time, your close for a given trading day is below usually this price. I'm like, what? So you go short up here 95% of the time, you're correct? Jesus. That's a bit much, right? How would you risk manage that to the upside? Like, yeah, I mean, jeez, where'd you stop out on that? Unless this thing needs more samples. Seriously, that many lows are right there. Oh, on a daily, on a 1 hour. I don't know, that actually makes a bit more sense, except that gap doesn't. Yeah. I'd say right around here, NFP came out. This was probably one of the better shorts to take. Yeah, after NFP came out, looking at these probabilities. I don't want to go looking at all these different charts, but I'm just looking at these stats, and I'm like, yeah, that would have actually been a fairly decent risk-reward trade plan. Reserve Bank of Australia. That's what's happening next week. The consensus expectation for next Tuesday's Reserve Bank of Australia cash rate meeting is, drumroll please, no change. Westpac and a few other groups, I mean, just across the board, no one's expecting anything other than no change. I mean, look, don't get me wrong. A couple of the analysts mentioned, like, oh, maybe they'll do 25 basis points, but it's like 80-20, with the 80 in favor of no change. However, it was exactly like that at the last meeting. Because remember, the last meeting, the RBA did a surprise hike for 25 basis points, and that made the Aussie dollar just run up, and away. And that was kind of funny, because I was long into that. And I think I was long into that actually based off these yield spreads, believe it or not. Interesting little indicator. Alrighty. Again, if you want some of these research and these outlooks, It's all in Discord. It's all free research, so I share it for free. Just go to the Outlook's channel in the Plan to Profit Discord. Read it for yourself. Yeah, Danske Bank, Westpac, and Moody's are all expecting an unchanged policy on the RBA. Let's see here. Oh, this is a good little bit. One adjacent economic indicator to watch for Australia and New Zealand, for that matter, is Chinese CPI next Friday. So at the end of the week, there's a significant likelihood you get some sort of bout in volatility if CPI goes super high or misses. And guess what? The Chinese government just came out and said, hey, we're going to be doing a ton of stimulus for the markets. And I believe it was Western Nakamura. He literally just did his analysis like a few hours ago and uploaded it, and I watched it. And he brought up an index for housing prices in China. And what's interesting is that housing prices index actually would lead the exchange rate for dollar yuan. The reason why that's important is because apparently there is people with inside information who could be, there's probably potentially people in the Chinese government who are using inside information about the fiscal policy decisions in China and using that to make trading decisions ahead of time in the real estate equities of the Chinese equities market, which I found actually to be kind of crazy. I would have never looked at that if it weren't for Nakamura. So if you get higher, if you get lower inflation, that could make the yuan stronger, I think, right? But it would also accelerate some of the weakness in the rest of the Chinese economy because there's currently a lack of money in, domestically in China to take care of business. So the smart thing to do, the hopeful thing actually, is you have a slight increase in inflation and you get the monetary supply, the fiscal monetary supply, the stimulus from China. And that helps take care of their economy. It helps resolve some of the potential growth problems that they could be running into. And that actually would be insanely good for the Australian dollar and the New Zealand dollar. So a lower or flat Chinese inflation would keep both of these countries' currencies, the Aussie dollar and the New Zealand dollar, on their downwards trajectories. If inflation is up, it will help New Zealand and Aussie dollar go up. It doesn't help that China's manufacturing also right now is in contractionary territory. Their manufacturing PMI is at 47 right now, 46.9, which isn't fantastic. And we get their services PMI coming out. I think we might not be, but I know we're getting services PMI next week. Hopefully we get some services PMI out of China as well next week. And we get some insight into whether or not we'll get some inflation out of services continuously. But I'll say more on that when we actually get there. Let's go to New Zealand dollar real quick. Oh, what happened to my little fancy drawing thing? Oh, the drawing, they're out here on a daily. They're way out here. So I have more outlooks for New Zealand dollar here. Real quick. They're just kind of far away. Come on, little drawings. Get over here. Get over here. Again, you can pause and read some of these. I'll be going over them in more depth in the trading group. But these are a couple of bits of information. What was interesting is that the more macro, more holistic. And by holistic, I mean an outlook that covers all of the major currencies on a week-to-week basis. The outlooks that cover all the major FX currencies, they all had mixed forecasts. Some of them were expecting more growth out of New Zealand, but for that growth to get hindered due to like their housing market rolling over and having to refinance at higher prices over the next 2 to 6 months. Yeah, it's the same thing. It's just going to be, people are going to say, hey, fundamentally on real term basis, we could see some increase in growth, but they don't want to tell everybody, oh, on a more nominal basis, because of all these other major external factors around New Zealand. We could be seeing New Zealand take some hits here. So it's not, it's kind of sweet and sour when it comes down to the New Zealand dollar, which ain't so great. Here's one thing. If you actually read that lower panel of text, that's from ANZ. That's the ANZ. That's a segment of the ANZ outlook for New Zealand dollar. And one of the things that interests me about that outlook is actually New Zealand CAD, because effectively what's said in that little box is if oil prices rise, then New Zealand Canadian dollar short might be an interesting trade to plan out. Oh my god, it's horrible. I haven't looked at this chart yet. Oh my god. That is a horrible, horrible trading day today. Oh my god. Let me check out the, oh my god, it's like really down. Whoa. Whoa, it's down 350 pips. Oh my damn. I mean, it's just been going down, down, down since the beginning of the year. Whoa. And it looks like it's accelerating too. That's not good. Yeah, see this? It's kind of got a, I mean, I can linear regress this just to kind of show. From here to here. And we don't need this extension. Style. Extended lines, no thanks. So you can see that's our little slope. And now that, yeah, not great. I mean, even if you wanted to be more conservative, right, you could do this, chop it back to the end of the first quarter here and only take this up to the beginning of the year, right? So this is exclusively just the first quarter of the year. And now if we take all this information, which is just the second quarter of the year, you can still see how this slope is more negative and the bands are wider, which that ain't great. And I'm going to actually keep that there. I think that's actually pretty all right. But if this thing I mean, one thing that is quite useful that you can kind of garner maybe from looking at these yield spreads is that they're still super negative. Yeah. If I was short, I would just continue holding the short. There's no reason to get out of the short trade at the moment. None at all. Yeah. Okie doke. So New Zealand CAD, interesting cross. Speaking of Canada, one of the things happening next week, other than the RBA meeting, we also have the Bank of Canada rate decision next week too. And guess what? There is no rate hike anticipated, just like the expectations for the RBA. Nothing's expected to change. So, yeah, not a whole lot. I'm actually short on this from up here. I'm super happy about it. I have almost a weird sense of deja vu on this right now. Because I'll share this much. In the trading group, over the last 2 months, I've been making weekly trade plans. And I mean, maybe even the last 3 months. I mean, I forecasted this low here, and I sold up here. And then I forecasted this low, and I missed this drop, but it dropped in 2 days. So I was able to buy at my expected low down here. And then I rode this all the way up to here. I got chopped out on this bar going long, thinking, oh man, maybe this is gonna break out to the upside. Nope. That's fine, you know. I flipped short, and then now it's down here again. I do, my favorite pair is dollar CAD. My favorite pair is dollar CAD. When I did COVID, my best trade was dollar CAD. Man, helps I'm half Canadian, you know. Helps that I'm Canadian. Not nationally. My citizenship is US, but my mannerisms and, you know, half of my Gen X come from Canada. So, looking at this, what can I expect? I don't know. You got to probably join the trade group, and I'll tell you what's probably going to happen for the rest of this month on this pair, because I have a pretty strong feeling about what's probably going to happen, kind of coming up here for the next Bank of Canada meeting. I've got pretty good at trading those. I mean, the last thing really to talk about is the services PMIs for next week. In all seriousness, that's the last thing to talk about. And you guys are going to have this excellent video for you all day today, all day tomorrow, and then going into the Asia Open on Sunday when we get into the weekly Open, where I'll do this all over again, once a day, doing the daily plans. And again, thank you guys for sharing this stuff. I'm super appreciative of everyone who keeps sharing these, showing up to the live streams, even though I'm streaming at super weird hours, right? Especially since most of my audience is in the US. This is like midnight, 3, 4 a.m. for some people. But I'd rather at least have something out, even if it's late at night, for you guys to watch over the weekend. And then I'll try and get to doing these at earlier times in the day. But just to be frank, I will delay these streams into afternoons if I can get higher quality interpretations by waiting for more outlooks and research and analysis to come out from some of the smartest people who publish free research. Like, if there are PhDs at banks who are writing free weekly analysis that, and I've been reading them for years now, like, why wouldn't I wait the extra hour or two after lunch to make sure I can read their analysis, not just to make sure that I, I have something to compare to when it comes down to what I know and what I anticipate based off my reactions to whatever the macroeconomic data or the price movement is, right? These guys are professionals. They have access to way more data than I do. They have fancy charts. They can be aware of risks that I might not be particularly aware of. So it's especially useful to be reading outlooks from a wide swath of viewpoints so that you can be aware of all sorts of different risks. And I learn a lot every time I go through all those outlooks. Learn a little bit every time, and you do it over and over and over and over again, week after week, day after day. And it will be very hard for you not to become someone who actually knows what they're doing or talking about, because you just consume as much of the information pertinent to your trading as possible, and to make you as risk aware as possible. I mean, look, a lot of people can't do that sort of stuff because they find it boring and super dry. And don't get me wrong, there are points in times where I find reading those things extremely dry. It just comes down to your approach to how the information is useful. Because if you view the information just as, oh, I'm going to be reading some dry macroeconomic outlooks so I can get better at my trading, I don't think that's a great way of interpreting outlooks as a way of actually serving you. I think a better way to approach the activity of reading outlooks and trade research is, the more you're reading these outlooks, the more you're learning about how the world works, how the economy works, and how it turns people effectively into numbers, and what those numbers actually mean and represent for real people. It's far more important that when you read all this analysis that you try and sympathize or empathize with the person behind those economic numbers and what it could be doing to their lives, right? I mean, I learned a lot just going through and reading all about the German transport ticket stuff. That was a huge, huge, like, boon to my knowledge about the economics of Germany. And now I know, like, oh, wow, there are all these political figures that are pushing for all these transport legislation stuff. And there's so, like, 3 million people on the same day signed up for the app to get that $50 ticket. And the app crashed multiple times because there's just so much demand for this ticket. It's, a really important thing that you try and relate the macroeconomic research that you're reading to what's actually going on in the world. And when you're able to put it into that sort of frame and that sort of context, it's going to be a lot easier to actually bear through and read outlook after outlook after outlook like I do. Now, I'm just kind of a madman. I'm reading, every single outlook that you see me post in that outlooks channel, in the Plan the Profit Discord. I'm actually reading all of that stuff before I go live, or maybe after I go live, depends on when. But I actually try and go through as much, read through as much, and comprehend as much of those outlooks as possible. Because, hell, if you want to know the risks when it comes down to trading and understand other traders' expectations, not just for those risks, but for various geopolitical, fiscal, monetary, all sorts of events that could be occurring in the future. If you want to understand expectations for events out in the future, it's important to try and educate yourself about, well, what are the expectations in the first place? So, with that little rant out of the way, one of the best places to actually read outlooks from is IHS Markit. And IHS Markit are the people who make the PMIs. So when I say services PMIs and manufacturing PMIs, what all these people talk about when they're talking PMIs are the IHS Markit PMIs. That's the company. And they actually just got acquired by S&P Global sometime last year. So now these are the S&P Global PMIs. Believe it or not, there's actually some head of PMI research or head of the PMI division now in S&P Global, and he does broadcasts. He does like hour-long analyses for like what's going on with the PMIs and how they're interpreting them professionally, and what sort of macroeconomic indicators can be forecasted with PMIs and different segments of the PMIs. Like, if you're willing to just go one or two levels deeper with your research and figure out, well, why does this indicator exist? Who makes this indicator, right? You can open the doors to so much just by being just a little bit curious with your analysis and your research. And, you'll end up learning not just a lot about economics, but a lot about how the world works and, how a lot of different things in the world are measured and why those measurements are interesting, what kind of impacts they have, et cetera, et cetera. So, not to drag on too long, right? Expectations for PMI services, they're kind of holding strong right now. PMIs are going to be watched closely, and they start to release on Monday. They're going to be released throughout the entire week, depending on the country. And look, because it's the services specifically that are the primary driver of growth and inflation right now in most countries, everyone is going to be watching the PMIs for how they could possibly lead CPIs going into next month. I'm going to go here real quick. Let me scroll down. Let's see here. See this? So June 14th, FOMC meeting, right? June 13th, inflation. Now, don't get me wrong. There's other indicators that go into the decisions for how inflation is going to turn out. However, it's important to try and get some idea of how inflation is going to turn out. Because if inflation comes out super high, you're pretty likely to get your 25 basis point rate hike from the FOMC. If inflation comes in nominally, sideways, or lower, you're probably going to get a hold. You're probably going to get a pause. Inflation really can swing how FOMC is going to go, rate-wise. So when we get this next bout of services PMIs coming out next week, once we get like US PMI services, right? US services PMI, it's going to give us some insight into what our expectations should be going into inflation. I mean, if the services PMIs are especially strong, it could cause the central bankers to hold a more hawkish position. And for inflation expectations to increase, or at least stay steady. Inflation expectations have, depending on the country, have been kind of wobbly. Some of them have been increasing, some of them have been decreasing. But net, if those services PMIs go up, inflation expectations go up. Fed doesn't like it when inflation expectations go up. And if it's a leading indicator for inflation anyways, it's not going to be good if you're going to be in the camp of pause. If you're going to be in the camp of the Fed pauses. And right now, if I go to the CME's website, it's like 70 to 80% of CME market participants on the Fed Watch tool anticipate that the Fed will pause at the next meeting right now. Watch those FOMC, Fed pricings at the CME, the Fed Watch tool. Watch those probabilities as we get US services PMIs. Watch and see if they go up or down, because that'll probably be one of the easiest ways to tell whether or not those services PMIs are good or bad for inflation, because they'll move like that. On a side note, I know I've been kind of focusing on the US services PMIs, but Nordea came out with another outlook, I think today or yesterday. And Nordea specifically pointed out that if the Eurozone service PMIs continue to be strong, that the ECB will continue to, of course, worry about inflation and the potential further increase of inflation expectations, giving even more ammo to the hawkish ECB, which would lend more favor towards getting those 325 basis point rate hikes. It'd make that a more likely scenario than just getting 225s at the next two meetings. I think that's everything I wanted to cover. If you wanted to get these indicators, hop into the Discord, ask me about them, or just buy them and join the trading group. You get the indicators and the trading group, link in the description. Just go to that WAP link, Boss Benchmarks. And then, yeah, that'll be it. I'll walk you through how to use them, how to set them all up. Other than that, everyone in the trading group, expect a video tomorrow going over some pivot probabilities and some range probabilities and some seasonal forecast expectations, going over at least all the dollar and yen pairs going into the next month and the next week ahead. So with that, thank you all so much for watching me for now close to an hour. And I hope to see you again and to continue sharing this work with others. Hopefully you find this information and these analyses quite useful. All right. Take care now and see you in a bit.